Now, when people hear about municipal bonds, I can tell you that the first thing that most of my clients think is that they're tax free. But is that really true? I'm going to say yes and no. Well, in today's financial freedom video, I am going to break down how municipal bond tax free interest can show back up in your taxes and increase the taxation on your Social Security benefits. So definitely stay locked in. Hi, my name is Carson Graves, certified financial planner and president and CEO of the Retirement Education Center.
And my name is Andrea Graves, Director of Operations at the Retirement Education Center. For additional concepts on how to maximize your retirement, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos.
Now, before we jump into our lesson today, there are always two rules to retirement income that we like to give you. And Andrea, what are those two rules?
Well, rule number 1 is to never run out of money, and rule number 2 is to never forget rule number 1. And by the way, if you want to go deeper into these kinds of retirement topics, Carson covers them step by step in his first published book, How to Retire with Confidence: 5 of the most common pitfalls that could derail your retirement. You can get it today on Amazon by clicking in the link in the description below. So now let's dive into our topic today.
So, when it comes to the question of can municipal bonds actually increase your Social Security taxation, the first thing that we really have to understand is what does the IRS say about this? Now, when it comes to municipal bonds, the IRS says municipal bond interest is federally tax exempt. So, when you're taking a look at your adjusted gross income versus your taxable income, it would initially look something like this here. You would have wages, let's say, for instance, of $80,000. And let's just say that you have municipal bond interest of $10,000. When it comes to your taxable wages, your adjusted gross income would only be $80,000. Municipal bonds would not be counted here. And so your taxable income, if you are a married couple, would be only $48,500 after your standard deduction has been added. So here's the catch when it comes to municipal bond interest. Municipal bonds are added back for certain calculations. So although the IRS may ignore municipal bond interest when it comes to your regular income taxes, it gets added back when they calculate your modified adjusted gross income. So here's where this may come into play. It can matter when it comes to the taxation of your Social Security benefits. It can also come into play by increasing you into a higher tax bracket, which could cause your Part B and Part D Medicare premiums to be increased as well. And also, if you're trying to qualify for certain credits and other phase outs when it comes to your retirement, it can push you out of those opportunities as well. So let's go ahead and take a look at a quick example of how this can actually play out. So let's look at case A first, and we're not going to be looking at any municipal bonds here. Let's say you have wages of $20,000. You also have Social Security income of $30,000, but here we don't have any municipal bond interest. Your adjusted gross income before Social Security is added is $20,000, but your provisional income is going to be the $20,000 plus one half of your Social Security benefits for a total income of $35,000. Now, if you recall, there are certain thresholds as a married couple that if you hit, your Social Security benefits may become taxable. If your provisional income is below $32,000, there is no taxation on your Social Security benefits. As a married couple, if that income goes between $32,000 and $44,000, up to 50% of your Social Security benefits can become taxable. And if that income creeps above $44,000, up to 85% of it can become taxable. So in this situation here, because your income is $35,000, only up to 50% of it is taxable at this point. But let's go ahead and look at case B, and now we're going to look at the $15,000 of municipal bond interest being added here. So your wages is still $20,000. Your Social Security benefits is $30,000 as before. But now we have municipal bond interest of $15,000 in the equation. Again, your adjusted gross income with Social Security is $20,000, but your provisional income is now $20,000, now plus the $15,000 of the tax-free municipal bonds is added here, plus 1/2 of your Social Security benefits. And now your income is at $50,000. Now, in this particular case, up to 85% of your Social Security benefits now become taxable because you are now above the $44,000 threshold. The moral of this video is that municipal bonds, they may look like they're tax-free, but the bigger picture shows that they can still raise your Social Security taxes and or even your Medicare premiums as well. The lesson in this story is that every financial move actually connects to the bigger retirement plan, and nothing actually happens in isolation, so you should always make sure you seek professional advice when it comes to these matters. And we would also like to hear from you. Have you ever been surprised by how taxes just showed up in your retirement income, maybe from Social Security or other investments that you thought were tax-free? Please drop your comments in the section below. Thanks for watching. And again, always be sure to speak to a certified planner in your area who can help you with these types of decisions.
After this video, please check out our other videos that will give you tips on how to maximize your retirement. And if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers. Please note that these videos are created for educational purposes only, and that you should always seek out your own financial advisor, your own tax advisor, and your own attorney regarding your personal situation. Also, if you are looking for an independent fiduciary advisor to help you with these types of complex financial matters, we highly recommend that you utilize the links in our description below and go ahead and schedule a 1-hour free consultation with us today.